So I build trading algorithms. As you can see here, this is my Serenity EA. I'm launching this pretty soon. I've been building algorithms for almost 10 years now. They've been my backbone to my trading because I suck at manual trading. As you can see right here, I have been struggling with my manual trading. It's been huge gains and big losses. I'm down 36% right now. And this account is now being taken over by my algorithms because I don't trust myself to make a recovery on this account. 36% is basically my limit to making a recovery, and it's going to take me about probably 6 months to do this. But this is where the backbone comes in. When I fail as a human, my algorithms are there to basically pick up the pieces and push me through this. And I've done this before, and it's nice to know that algorithms can do that. And it's because they can stick to a strict trading regimen when it comes to risk. And, that's a huge thing. That's one reason why most traders fail, is because they struggle to stick to the rules, right? So the Serenity EA has been running on this account since November of last year. And you can see that it's really made a good profit, 8.32%. Now, we're not looking for huge gains. Like, we're not looking for 30, 50, 100% per month. Like, that's unrealistic. We're looking for a long-term strategy that is going to build us wealth, right? So you can see the profit here, the gains, right around 2%. So that's the average that I'm looking at with the strategy. The Serenity Strategy runs on MetaTrader 5 or MetaTrader 4. I still find these to be the best platforms for auto trading. They have been around the longest, they are the most tested, and you can import really high quality data that gives you an accurate representation of how the strategy may perform in the future. So the Serenity runs on 8 different pairs. So 2 different charts, and you can see the pairs right here for the first strategy, the second Serenity strategy. So this is Serenity number 1, and you can see the year-to-date estimated profit, and this is since 2003. So decent numbers, about 1% a month. All right, so this is Serenity 2, also about 1% a month, and really consistent gains over the long term. So this is the 2 strategies combined, and I'm using the quant analyzer for this to combine the backtests that give me a representation of how the strategy may perform. So you can see that the profit factor is pretty good at 1.93%. The drawdown is showing as too low. This is not accurate. Quant Analyzer doesn't give you an accurate representation for floating drawdown or floating loss. So this number right here is not accurate, but everything else is. So the percent gain and the estimated profit. Okay, so let's get into drawdown and show you what to expect. Shit, wrong picture. Okay, drawdown is for each pair. All right, so you can see here, OddCAD, so this is 12.57%. And what we're looking at here is we don't want to see the notches in the backtest. So when you see an equity drop like this, that's not a good thing. That means that the strategy is going into drawdown. And so you can figure that the highest drawdown area was right here around 2007, so late 2007. And you can estimate that based on how long this is, how large this move is, if that drawdown was touched again. So you can see that it was pretty close here, another almost 13% drawdown, and then also another close to 13% drawdown. So that's 3 times with the Aussie CAD. All right, so not bad, but still pretty good. And the drawdown percent max drawdown is still pretty low. So we want to see a backtest that has a smooth equity curve. So no dips in the equity over the long term. And the smoother that it is, the better the strategy. And I've learned this over 10 years of backtesting and building out strategies. And it's a hypothesis, I guess you could say, but anything is in trading. We're all trying to make guesses here, and it's difficult to really make that accurate assessment of how good a strategy is. But from what I've understood, this is how we want to see our strategies. A really smooth line with not many dips in the equity, because that means it's higher drawdown. You can actually see the trade build up right here on these notches as well. So this is the Aussie NZD. You can see that this is a really good pair. Low drawdown, 5.33%. And you can see that there's not a lot of dips in that, and low drawdown maximum altogether. All right, so this is the Aussie USD. And this pair I actually did not use. 31% is a little too high for me, and it did only have that one dip in that with that equity hitting that 31% drawdown. and then it was pretty smooth. So this is a pair that I didn't include in my backtest estimate, and it could give you more profit if used. So this is something that you guys have an option of using if you'd like. But you can see that pretty good still. All right. So this is the Euro US dollar, another really good pair. You can see that maximum drawdown is really low. So you can estimate that the maximum drawdown was hit right on this one. It looks like it's the biggest dip in the equity, and that happened in 2013. All right, this is the Euro CAD, another pair that I did include this one because the maximum drawdown was only 22%. I'm looking for keeping drawdown under 30% on each of the trading pairs. So this maximum drawdown was hit pretty recent in 2023. And you can see that that was 22%. And then this is probably about 15% here and probably about 15% here as well. So that's 3 times in about 17, 18 year backtest. All right, so you can see here, this is the Euro Pound. I just added this pair. So the 28% was hit in 2005. So the rest of the test was really smooth, especially after 2010, as you can see. Really clean trading from there on out. All right, so that's the Euro Pound and the Pound CAD. So this is 11.64% drawdown and really clean trading after 2013, and looks really good, and it's a really good pair, and the profit's decent as well too. Okay, so the Pound USD. So maximum drawdown was hit right here in 2006, and this was probably around, my guess is 18%, maybe 17, 18% right in here in 2020. But it came out of it just fine, and the profit's pretty good on this pair, and really clean on this one overall, even though it did hit that 25%. All right, the USD CAD, so 8.3% here, really good pair, maximum drawdown really low, and really few dips in maximum drawdown. So the 8%, as you can see, you can make, visually here, you can see that it was hit in 2017, and it's been smooth ever since. Okay, and then the last pair, I didn't use this one, and this is for the Serenity 1. So this is for the Serenity 1. It has more trading pairs than the Serenity 2. And I did not include this pair as well. This is probably, in my opinion, the worst pair. You can see just how many of these drawdown periods happened in the equity, and especially recently in 2022, where 30% was hit. So pretty recent. And then another one that was recently hit in 2023, which not 30% drawdown, probably about half of that. All right, so Serenity 2 is right here. You can see that this is the Euro US dollar. Really, again, a really good pair for both the Serenity 1 and Serenity 2 strategies, and really clean, especially after 2014. Basically no drawdown on any of the equity. So probably like 1-2%. All right, the Euro CAD, pretty good on the Serenity 2, 16.56%. So the maximum drawdown was hit right in the middle here back in 2017. And then it was close to being hit again, probably around 14% in 2023. All right, the Pound CAD, maximum drawdown hit in 2012 or beginning of 2013. And then hit again in 2016, probably about, my guess is about 12 to 13% drawdown right here. All right, Pound USD, so 23% drawdown in 2009, and been clean ever since that time. So, and this is a high profit, one of the higher profit pairs for the Serenity 2. So I would look at keeping this pair if possible, even though the maximum drawdown was 23%. All right, the USD CAD, 7% drawdown. This is one of the best, or the best pair for the Serenity in general. Is the 7% max drawdown, and you can see that it's a really clean trader, and the profit's also decent on that one too. USD Swiss franc. I don't like the Swiss franc that much. Just the currency in general. I don't think it has a lot of news, and whatever pair is it's attached to, typically doesn't have a lot of effect. So the Swiss franc is good for auto trading. I don't think it's good for manual trading. But you can see here, 14% drawdown was hit in 2022. So pretty recent, and it had 2 drawdown periods back to back. But overall, still pretty good pair. I would definitely consider using it. All right, so that's the last of the Serenity 2. And you can again see that the combined profit for all the strategies is really quite good at 2%. So this is just the default settings. You can increase the risk, you can decrease it if you want to, have a maximum drawdown. I think the highest that we saw was around 28% with the euro pound for Serenity 1. And if you want to reduce that, drawdown, but that potential drawdown, the worst possible drawdown in that test, down to 15%, you can do that, but you'd be most likely making 1% profit instead of 2. You can also increase the risk and all that kind of stuff as well. It's all up to your risk appetite. But the idea here is to build a strategy that has a smooth balance and equity curve that has few times of hitting high drawdown. And that's what we're looking for, that smooth line of increase of equity and balance. So I'm going to be releasing the Serenity EA on March 24th. At least that's my goal. I'll see if I make it. It's part of the Powerhouse strategy, which already has 6 really good strategies in it. You can actually see on responsibleforextrading.com, my website, these strategies and how they're all performing. And so it's basically like this sandbox algorithm that allows you to run multiple strategies. So the Serenity will be added to the Powerhouse. So it will now have 7 different strategies on March 24th. Okay, so I want to show you guys what it looks like on charts. So this is the Serenity 1 right here. And you can see that one chart runs all these pairs. Now you can see if the trend is up, or if the trend is down or neutral, and gives you an idea of the P&L for whatever pair that is being traded. And this is the Serenity 2. Now, Serenity 1 and Serenity 2 trade on some of the same pairs. So when one strategy is in a trade sequence, for example, like on the Euro US dollar, then the other strategy is on pause when it comes to trading on the Euro US dollar until the other strategy is done. So they basically are not taking trades on top of each other. And this is a deliberate thing to make sure that we're not overexposing our account. The Serenity is based on one of my best methodologies. So the Comeback Kid I created about 3 years ago. And this has been one of the best strategies and most popular that I've ever produced. And it's because it has double trend filters on different time frames, and it looks for pullbacks within that strong trend to take its positions. And it's not looking for huge profit, but it shows really consistent results over the long term. This is how most traders want to trade the markets, but it's difficult to find out where a strong trend is. So the Comeback Kid actually is great at teaching traders how to approach the market in the best way. This strategy has shown really good results over the long term since 2021 on this account that you see here. And I had to reinstate the forward trading account and did that in October of last year. And you can see that it's only 0.44% since October and really strong, consistent results. The Serenity strategy is really quite complicated, and that's what's so great about algorithms, is that you don't have to figure out what's going on. But I want to explain it to you guys the best I can and the quickest way possible. So this is the Serenity 1 strategy. It's using 5 different indicators. So most of these are filters, and a few of them are actually signal indicators. So we're using the MACD divergence here as a signal, and also the AMA RSI. Those are our signals, and we're looking for trades within a strong trend. So let me zoom this out a little bit. So you can see we're using the, I hate this name so much, MAMA plus FAMA indicator. I have it just M plus F. And that is our main trend filter, and the weekly ADX is our other. So we have a higher time frame weekly ADX trend filter and a lower trend filter, which is the M plus F. And then we're looking to take trades within the pullbacks of that trend. And sometimes it can be with the trend depending on the situation. So the RMI is a really great filter for finding the pullbacks within that strong trend. And so that's what we're doing here, is taking positions on the dips within a stronger trend and looking to capitalize right in this area. As you can see, we have orders that were placed and hit profit. This is on that test account that you see that I've shown you already previously. So this is the account right here that you're looking at and showing you directly on chart. So the trades are really quite short in most cases. We don't want to be in and out of the market very quickly. The Serenity 1 looks for about 10 pips profit in most cases. And the Serenity 2, a little less messy on chart, but we're using a double trend filter, which is the super trend on a higher time frame and a super trend on a lower time frame. And then we're using a indicator of my own design. This is the AMA RSI, but it's showing you basically extreme levels, and this is the filter for pullbacks within that strong trend once we have the super trends in agreement. So both super trend indicators have to be in agreement, and then price has to be within the limits of the AMA RSI. And this is the Serenity 2, and probably my favorite of the two strategies that are part of the Serenity. And you can see, I'm going to show you some of the entries here of where trades are taken. So this one can also take trades with a strong momentum on the upside. So this isn't quite a dip on the trend. It's actually pushing up. And there's a smaller dip right in this area and then entered right here. And you can see the multiple trades that it entered right after that. So the Serenity and a lot of RFT strategies at this point are average in traders. So they look to average in the position and close out all trades together for a profit. And some can have multiple trades, and some can be really quick and easy. So for example, this entry right here, where it was one trade, two trades, and we closed out for a realized gain. All right, and you can see the most recent where the trend was strong right here, and there was a smaller pullback right here at the top where it pushed here and looking to continue back up. And this was a 3-trade sequence that closed out for a nice gain. And then right here, dip in price, entry right down here at the bottom, another dip in price, entry right here for that pullback. And if we didn't get it when they happened earlier, price definitely moved up a little bit later on. So one of the things that makes the Serenity so strong is it's borrowing one of the best mechanics from the Comeback Kid, and that's its recovery system. So the Comeback Kid uses this pivots indicator, which shows you 3 levels of resistance and 3 levels of support for that day. And it enters in and around the first level of support and resistance, 30 pips below, 30 pips above. And that's natural support and resistance for the market based on this indicator. And so it's looking to re-enter into the market to average in its position around these key levels. So it's able to work with that market and that natural flow to get in and out of trades quickly. All right, so this is the Serenity 1 and Serenity 2. Looking for trades with a strong trend and able to capitalize on that with low drawdown over almost 20-year backtest. And it's been showing really strong results since November of last year and looking for 2% gain with just the default settings. So if you guys have any questions, you can check out responsibleforextrading.com. Check out our Discord channel as well for more information about the Serenity EA launching on March 24th. Thanks for watching, everybody. See you on the next one.